Hello, everybody. Welcome to the Technical Analysis webinar. This is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading the presentation today. Before we get going, just a quick systems check. Give me an OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we're good to go. Thank you for the responses. So a lot going on fundamentally recently here in the past 24 hours that is helping to move the charts quite a bit, and we'll see if with some examples on gold and oil and indices and some other things that are responding quite well, that with pure technical analysis you actually could have taken nice advantage of the movements, and we'll show a couple strategies that would have worked quite easily to pull some nice potential profits. And we'll look at what's going on moving forward fundamentally as well, and how the technicals could line up for different strategies for taking advantage over the next 24 hours or more. So with that said, keep in mind all investments have risk. What we cover is not meant to be taken as financial advisement. It's coming from an educational perspective. Trading Forex, CFDs, spread betting, options, these sorts of investments, obviously no one trade is guaranteed to win. There's risk with each move that you do. And not every trader profits long term. I wouldn't say a select few. It's about a third or so of traders, maybe a little bit less than that profit long term with AvaTrade, and many others are striving to do that and to beat the small spread and the swaps on a long term basis. And so what we cover today hopefully can add to your tool belt, put together some additional ideas to improve upon your trading strategies so that you can be part of that hopefully growing portion of our clients that profit long term. You could read our full risk disclosure statement as well on avatrade.com. And speaking of risk, those of you who've come to my webinars, I've been mentioning recently, because a lot of our clients aren't necessarily aware yet completely on all of the FX, gold and silver. I know gold has been extremely popular lately with this tool. Through the AvaGo app, there's a protection tool in the order window called Ava Protect that allows you for a flat cost to protect yourself against any losses during the selected time period of coverage. And so it's a really nice feature. If you have any questions about it, let me know. Again, it's on the AvaGo mobile app and not available with any other brokers or on any other method of accessing your trading with us. You need to use the AvaGo app. It's a unique feature to AvaTrade through that app. So you might check it out. Now, our technical analysis, we're going to lean on manual methods for the most part. We don't use indicators much at all in the webinars because there's a lot more flexibility with manual methods, and you can help to eliminate, I think, false signals more than what an indicator might give you. And with any questions, comments, please don't wait to the end, as this slide would suggest. Ask questions, interrupt at any time as we go along. I'm happy to address any points or questions. So if we take a look quickly on my demo account here at gold, we see earlier today there was a huge spike up, or late yesterday. It was actually 11 p.m. yesterday, GMT time. We got this huge spike up in gold. Who knows what happened there? Who knows what happened here? Thomas, if you would, email me, okay? Email me the call request. Yeah, there was an Iran strike. And by strike, we mean missile strikes, not a work strike. So the Iranians retaliated for the killing of their general, shot from from different reports I've seen, anywhere between 15 and 20 rockets hitting different U.S. Military assets in Iraq with the missiles sent from Iran. So the markets kind of got very nervous by that, which is understandable. We can see gold shot up from where was it, 1571 all the way up to 1610. So what, almost $40 jump in the price of 1 ounce of gold. And so that was quite a spike. And I know a lot of people were buying on gold already. So if you had gold positions in the buy position before this spike, boy, that paid out well for you if you got out after it spiked up. Now it's pulled back some, and let's look at the technical analysis on it. We see here, this is an old support, old resistance, I should say, right about there. Okay, so this was resistance, resistance, and then it took the breakthrough candle, the momentum, to break this. Okay, so it took a huge story, basically the beginning of maybe a war, to break this resistance level. There's the breakthrough candle, and then here it pulled back. But look, it didn't break that support. Didn't break that support level. Okay, it hit, it tried to break it, and it's still trying to break it, but it didn't break above. So that's where we sit right now, technically speaking. It's above a support level that it tested once and held. And the question is, what's going to happen next, right? So technically speaking, if you think there's still a lot of fear in the markets, I know Trump plans to speak morning time, U.S. time, to deliver some kind of message as to what the U.S. plan is moving forward. Let's see, someone's complaining they don't have sound, but they've already left the webinar. Okay, so, but what we need to do then is, how do we know what we prefer to do? Trade up off the support, wait and see if it breaks the support and trade down. That's a possibility. Maybe it's going to continue to correct. Where did it spike up from with the news? Right here. It didn't return there yet. 1571 is where it spiked up from with the big news. If it's going to fully correct, that means it needs to come down another $10 in the price of gold before it actually fully corrected. Now, it doesn't mean it has to fully correct, right? There's still fear in the markets, but the fact is it has not fully corrected. So, but it is respecting this support level right here, this old resistance level as support for now. So if you want to play this both ways and you take a market buy, this is a decent strategic location to do a 1-2 move because it's on that support level. And it has reason to drop further if it's going to correct all the way. So you could do market buy off the support if you feel, I'm not telling you should do a market buy, if you feel the fear in the markets is still going to respect this support and it'll bounce back up. It already established it can break above 1600 up here. Okay, so that's a nice potential profit, and you don't have to risk much to get underneath this little support level. Okay, you could risk just a couple dollars in the price of gold for the potential gain of $20 rise back up. Okay, type okay if you've got sound with me. I don't see anyone else complaining, but let's double check. All right, good. I've got enough responses. We've got plenty of good sound. Let me tell Karen that it's just her. Okay, message sent to Karen that it's just her. All right, so looks like this sets up nice for a 1-2 move with good potential either way. Okay, you know, if the U.S. wakes up today and says game on, and not that war is a game, it's just a phrase, but if they decide to go take out Iran's oil facilities or something, boy, you could see gold shoot above even this spike up here. and then some, right? And not to mention oil. We'll take a look at that in a little bit. So the potential for this to climb at least to the high that it already established or somewhere near it is there. And the risk, if it breaks the support, if you put your stop loss down here, it's a small risk. So we're not saying you have to be right. We're saying high potential for climbing with very little risk to get underneath this support level. So that's one potential move. Technically speaking, and that's what this webinar is about, is technical analysis. It makes sense. Fundamentally speaking, it also makes sense. Okay, that the fundamentals are creating huge potential for movement here on gold. So these types of moves, if you take your shots and you're right once out of 3 or 4 tries, it's a profit overall. Then you could have a sell stop set up down here. If it breaks that support, maybe that means the US decided to back off, right? If it breaks that support, your market buy loses. Okay, small loss. Boom, you get in on a sell. It could drop to the next support level, which would be maybe down here. Okay, down near 1558 is the next support level. So if it breaks that support and starts running, it could have some room to drop if the markets say, woo, okay, no war. They're going to work things out. If that's what happens, if that's what the breaking news tells us, you really could see a reversal of gold quite a ways down. Okay, so huge potential for movement today on gold, one way or the other. Get yourself set up if you like that idea to potentially profit in either direction here with a huge potential profit, and limit your risk just to the other side of that broken support if the sell stop kicks in. That's an option. Okay, you obviously can go without a stop loss. You can do it the way you see fit, but that's one way you could limit the risk and have high potential for profit. Okay, so let's take a look at the fundamentals. What's happening? And so I just pulled up some articles. That obviously we know this is what happened. Iran, avenging the killing of their general, did air strikes or missile strikes, I should say, and they were aimed at U.S. troops in Iraq. And this is the unknown. Trump weighs the response. They don't know yet. Nobody knows yet what the response is, except maybe those in the White House and the Pentagon. I'm sure they know what the response is going to be. So we'll find out. Time will tell. But I think it's huge potential to move the markets either way. Huge potential. We could go to investing.com. It's the first story on every major news site that you look on when it comes to the markets. First story. And what's amazing is today is crude oil inventories. Today is advanced data payroll, preparing for NFP at the end of the week. Biggest jobs announcement every month out of the U.S. So there's huge news today, other than U.S.-Iran potential war situation. And even that huge news is not even being talked about right now. That's how big the U.S.-Iran situation is. Okay. Now, so investors pause the selling as fears of immediate Iran-U.S. escalation abate. Okay, abate means like are kind of dying down for a moment. So people are saying that when Trump said all is well, so far so good, he was saying no U.S. troops had been killed. And so he's saying all is well, so far so good. People took those comments as maybe there won't be a war. Maybe they're going to work things out. And also the Iranians said they do not seek escalation or war. And the U.S. side was saying that same thing yesterday before the missile attacks. Okay, so it's interesting. Both sides are doing things that are considered acts of war, right? Killing a top general, sending missiles. Both sides are doing what could be construed as acts of war, but then both sides are saying they do not seek war. So who knows what will happen, right? It's a situation that could blow up at any time. It's a situation that the markets could say, ooh, they're working it out at any time. So that's the whole point of what we're looking at on the chart with gold. You can take a shot at the market move now because it's sitting on top of a support. You can prepare for a broken support going with gold shooting the other way in case that happens at the same time, because you only need to be right on one. And you can be wrong once or twice. It could dance above and below that support 2 or 3 times, and you could take a few small losses and re-enter with those small losses around that support level. And then once it shoots once, if it does like it did yesterday, late last night, boom. If you make $40 profit on every ounce of gold you're holding, and you lost $1, $2, $1, $2 each time taking a limited shot, you only need to beat right once out of even 10 times, and you can make a nice profit. Okay, it's all about trading smart. It's not about necessarily being right the first shot or the second shot that you take. Okay, so huge potential. Everyone's talking about it. Now, I mentioned there are some other things going on in the world. Well, let's take a quick look here. Futures have turned green a little. You see here, S&P, NASDAQ, they're green with all the fear. They're green today, the futures. Why is that? Well, it's like that article just said. Okay, the immediate fear of U.S.-Iran escalation has kind of gone away for now, right? Who knows 2 hours from now? But for now, that's why what we're seeing here is the futures turning a bit green after all this red yesterday. This red is from yesterday. This is today's futures. Okay, the markets haven't opened yet in the U.S. These were the markets yesterday. These are the futures, and we trade on the futures. So when we look at the charts, you'll see, yeah, S&P, NASDAQ, they're up a bit. Not a lot, right? Barely up, 0.05%, 0.08%, but they're certainly not shooting down right now. They're in a hold position. They're in a let's wait and see position. Okay, kind of like gold sitting above the support level. The markets are doing the same thing, waiting for a huge move potentially. The VIX 500 volatility index, that is not waiting. It's up over 4%. Just today, up over 4%. That's the volatility, the fear index. Okay, that tells you something. It's up over 4%. If gold has dropped down, but the fear index is still up over 4%, maybe that tells you something about what you think gold will do. Okay. Usually, as the fear index, the volatility index goes up, so goes gold. Okay. So it's something to keep in mind. We all know gold shot up already anyways. It's pulled back some. We understand that as well. Okay, so that's the fundamental situation. So then, oh, and I wanted to show you, I promised before we leave the fundamentals, I promised to show you some things today that are coming out. Here's non-farm employment change. That's a 3-bullet announcement. It's a big deal for the U.S. dollar strength, for U.S. indices. We've got crude oil inventories. That's a big deal for oil, obviously. These numbers are released each week, usually on Wednesday, unless there's a holiday. Sometimes it's on Thursday. Inventories are expected to have dropped, but not by as much as the prior reading. These numbers come in higher than expected. That could pull oil down. They come in lower, meaning more negative than expected. That could drive oil up, meaning if the inventories dropped even further, that means supply's dropping, and they could go up even more. So huge potential for movement on oil today, especially because of U.S.-Iran situation and crude oil inventories on top of it. What a day. So why don't we take a look? We looked at gold. We've got an idea of some potential movement here. I really like a 1-2 setup here, but you have to do what you think is right as well. Now, if we look at crude oil shot up when gold did. Why? Usually when oil's going up, it's for good economic reasons, and then gold goes down. So that's why they usually move the opposite of each other. And when gold's going up, usually it's for bad economic reasons. Gold goes up, so then oil drops because bad economy means less demand for oil. So usually they move opposite of each other. Gold goes up, oil goes down. Oil goes up, gold goes down. Why did they both move up together today? Because it wasn't driven by the economy, it was driven by fear. Fear of an attack in an oil producing area of the world, or a war in an oil producing area of the world, strategically located on the Strait of Hormuz, where a lot of oil has to pass through from more than one nation that produces oil. So that shot oil up along with gold. Okay, it's not a typical movement. It's an atypical movement. If you're talking about economic driven movement, it's a typical movement if you're talking about fear driven movement, which is what this was. Fear drives gold and oil up at the same time many times. So, and then we see it pulled back. Now, I do like this support level here. Okay, support, support, support. It has not broken this support. If you feel, and again, this goes back to each individual trader. If you feel that there's going to be more fear today, and I don't know if you've paid attention to how Trump tends to talk and handle things and do things. Sometimes he can be quite aggressive, not always, sometimes. And let me give you some examples. The U.S. had a drone shot down by Iran a while back over by the Strait of Hormuz, that whole area, the Persian Gulf. And everyone cringed and said, oh my gosh, what's going to happen? They were fearing war, and Trump said, no, it's okay. It was just a drone. And everyone said, wow, he's being reserved. He showed a different side of himself. Then the Saudi oil facility was attacked by all accounts, what many believe was backed by Iran. And everyone said, oh, what's the response going to be? And again, reserved. He didn't do much. Now, the embassy in Iraq was attacked, and he killed a general. Right? He ordered the killing. He reacted immediately. The opposite of those situations. And so the difference was there was a U.S. life lost somewhere in the mix there in Iraq with a contractor, and that was I guess the red line. So this situation, then, it's the same thing. Everyone's wondering what's going to happen. Is it the reserved Donald Trump that's going to say, okay, let's work things out? Or is it the reactive Donald Trump that's going to sick the military on a big response? This is up to each individual person to decide what do they think is going to happen. Certainly, that's what drove this spike, right? In oil, in gold, was this whole U.S.-Iran situation and the response that Iran had recently in retaliation back. Okay, if retaliation occurs again from the U.S. side, what's going to happen with oil? Most likely, if there's more bombings, missiles, you'll probably see oil have the potential to shoot back up here. Okay, what do you think is going to happen with oil if Trump surprises everybody again and says, well, we're working on setting up negotiations for a new agreement. We're going to be reserved. If that's the speech this morning, New York time, when he plans to give a speech later today, I'm not saying it will be, but if that's his response, reserved, and saying he's not going to do much in terms of military response right now, then you could see the support level broken and oil come all the way back down towards 60 or something. Okay, so this is fear driven. It can be undone by lack of fear as well. Okay, so again, I like a 1-2 concept here. I don't have to risk much to get below this support to take a shot at a ride back up. I can get in on the opposite move with a sell stop if this support level gets broken. It must be really good news if this support level gets broken, right? If oil drops down below this support, people must think, wow, there's just no risk to Iran's oil facilities and to the Strait of Hormuz then. There must have been a really good negotiation promise if this support gets broken. That's my thought process. And if that support gets broken then with what must be really good news on this US-Iran situation, then why should oil only break this support and stop? Likely that type of news would warrant a further drop if that support gets broken. Okay? Not for sure, but certainly a high potential for a reverse of this climb. You could see that sort of move back down. Okay? I say could, not will, could see that kind of drop back down. So I think there's a nice 1-2 setup potential here. You could wait and see if it gets closer to the support before you'd buy on this, if you're looking to buy. Or you could take your shot now if you think it'll go up, right? Either way, it's not that far to get below the support for a stop loss. And then a sell stop down here could make sense as well. So both on gold and oil, a 1-2 setup looks like technical analysis wise, it sets up nice, even if you weren't looking at fundamentals. As you look at fundamentals, then you say, "Ooh, now there's even a more of a reason maybe to trade around this support level because there could be some huge momentum today." All right, great, Thomas. They'll let me know, okay? All right, so all right, any questions on the gold and oil situation? Because they set up pretty similar. I think the gold sets up a little nicer than the oil, but they both have huge potential. Okay, so what about indices? Let's take a quick look at indices, and I think we'll call it a day. So because this is involving the US so much, we'll focus on US indices. We can take a look at the NASDAQ. Okay, NASDAQ is over the last, 15 hours, spiked down. This drop was the fear. This rise is Trump tweeting, "Oh, so far so good. Everything's all's okay." Okay, market recovered back up then. Okay, so you see how volatile the situation is. Look at this range. Look at how much money can be made between here and here. Okay, support level, resistance level in this general area. Okay, resistance, support down here, support, 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 resistance, 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 and here it comes getting near the resistance. So if you think the fear will come back, okay, or even if you don't, if you just trade on technical analysis, you could sell right now on the market sell. Okay, if it retraces back down, what a huge profit. Your risk does not have to be that much just to get above this resistance level. Okay, do we really think the markets are going to reach new highs today with what's going on? Anything's possible, right? But in trading, you're going with what you think is probable so that you can be right just a little bit more than you're wrong. Okay, so high potential for a pullback in the market, high potential for very big movement. Look how rapidly this dropped. Look how rapidly it came back up. You see the potential, right? Limited risk to get above the resistance if you want to take a shot at this pulling back down. If it comes all the way back down here, man, I'm looking to have an opportunity for it to bounce off this support. Maybe I have a buy limit ready to buy back up down here. Okay, I might hold off on that because by the time it gets down there, you don't know what the news might be, right? By then, right now, I know what the news is. Still some fear, I don't think the momentum's there for new highs on the markets to hit right now. People are kind of in a holding pattern. We saw that in the articles we looked at. They talked about the investors are on pause, waiting to see what's going to happen with Trump's speech and the U.S. response. I think in the meantime, it's going to have trouble breaking resistance and has high potential to have large movement back the other way. Okay. Now, I'm not telling you to sell. If you feel it's going to break this resistance and climb, put your buy stop up here. Okay. You can put a buy stop above this resistance and be ready for that also. Okay. No problem. Trump could come out and say everything's great. We're going to work out a deal. No worries, everybody. Let's get back to buying on the stock market. And you could see this break the resistance and go flying up. Okay. I'm not saying it can't happen. So you can back yourself up with a buy stop above the resistance. At the same time, you can also take a shot that this is going to pull back down. Okay. You can do a 1-2 setup here. I don't think it's as necessary to do the 1-2 here, but you could. You certainly could set up the 1-2 setup and take a shot at what could be a huge profit on the way back down, or a possible breakthrough with a buy stop. Okay. And we can look at the Dow Jones. It sets up similar. It also had a rapid drop and a rise back up. And we could look at the S&P 500. When we look at the Dow Jones, we see the rapid drop. We see the rise. We see that where it's pausing is here. Okay, this is an old resistance level here, resistance. And it paused at that spot. It hasn't reached as nice of a resistance level necessarily as the NASDAQ. The Dow Jones hasn't, but certainly could start to pull back or maybe climb a bit more before it would do that. I would lean towards the NASDAQ, I think, above the Dow Jones, technically speaking, in terms of the technical analysis, how nice it looks. S&P 500 sets up similar to the NASDAQ. Huge drop, huge climb. Here's one resistance level, resistance over here, resistance, resistance, resistance again at the same spot here, and now it's reaching that resistance level here. So, when you zoom in, you look 5-minute candles, it's still uptrending. It's still uptrending, but it is reaching a pretty major resistance level. Okay, resistance right here, you can see it. So if you're going to take a market move, you can wait. Go to the 5-minute candles, wait until you see, instead of an uptrend, you see a downtrend on the 5-minute candles. Then maybe if it's near the resistance and you see a downtrend start, then maybe that's your spot to get in. Okay. If you want to trade up with the uptrend, you could do that as well. I'm not in that camp right now, but I'm not here to tell you what you should or shouldn't do. The technical analysis to me is uptrending, but nearing resistance on a day where there's a lot of reason maybe for the resistance to hold. Okay, according to the fundamentals. All right, so any questions before we cut things off here? I think this is a good place to stop. We'll mark out that resistance level again. Here's the resistance, resistance, and drop off. The 15-minute candles show it the best here. Resistance, resistance, drop off with the news last night, recovery, slow climb back to the resistance. There it is. Silver and gold tend to move the same direction. Copper tends to go the opposite. Okay. Silver and gold, more safe haven type metals. Copper, industrial metal, used in wiring and all kinds of stuff. So what's bad for the markets is typically bad for copper and good for gold. No, Thomas. Last name is Fry, spelled F-R-E-Y. F-R-E-Y, Fry. Yeah, that's it, Thomas. Okay, great. So thank you, everybody, for joining. Thank you for the participation. Huge potential for movement, as we see on the screen right here. Huge drop out of fear, recovery on hope. You know what happens to hope sometimes. If that hope goes away, you see what could happen right here. Okay. And that's on all the major indices we've looked at. And also gold and oil have these huge potentials today as well. So listen, I hope to see you all trading on these assets today. Get yourself set up, maybe some market moves, some pending orders. I think you all can pull some really nice profits today. The potential is there anyways to do so. Good luck. And till next week, this is the last webinar this week. Till next week, good luck with your trading, okay? Bye for now.